Today, asset managers including BlackRock and Grayscale disclose fees for the proposed spot Bitcoin ETFs. Coinbase is planning an acquisition that would allow the platform to launch crypto derivatives in the EU. And Ben McMillan of IDX Digital Assets breaks down what a spot Bitcoin ETF in the US could mean for retail investors. Welcome to CNBC's Crypto World. I'm Jordan Smith. Crypto prices in the green to kick off the week with the much-anticipated decision on spot Bitcoin ETFs just a couple of days away. As of noon Eastern, Bitcoin traded just under $45,000 as the expectation of an imminent approval of at least one spot Bitcoin ETF has propelled the cryptocurrency's price. Ether and Solana climbed more than 1.5%. Crypto-focused stocks were mixed ahead of the SEC's decision, with Coinbase, the Grayscale Bitcoin Trust, and MicroStrategy all in the red as of noon Eastern. Bitcoin miners Marathon and Riot, however, both rose nearly 1.5%. All right, let's talk about the top stories. Asset managers, including BlackRock, Grayscale, and ARK21 shares, disclosed fees today for their planned spot Bitcoin ETFs as the deadline to approve these investment vehicles approaches. BlackRock set a fee of 0.3%, while VanEck disclosed plans to charge 0.25%, and ARK21 shares lowered its planned fee to 0.25% from 0.8% as competition among participants heats up. Bitwise disclosed a 0.24% fee, and Fidelity set a 0.39% fee from the filings we reviewed. It appears Grayscale also set a fee higher than other asset managers at 1.5%. Meanwhile, the exchanges that will list spot Bitcoin ETFs, like the Nasdaq and Cboe, filed amended documents last week on behalf of asset managers, including BlackRock and Fidelity. The amended 19B4 filings, which notify the SEC of a proposed rules change for an exchange, join amended S1 filings addressing feedback from the agency. It's widely expected that once the 19B4 filings are approved, the SEC could separately approve the S1 applications of all the ETF applicants at once. Next, as the deadline for a spot Bitcoin ETF in the US looms, SEC Chair Gary Gensler took to X to remind investors that there are risks associated with crypto. Gensler wrote in a thread today that investments in crypto assets can be exceptionally risky and are often volatile. He reminded people that a number of major platforms and crypto assets have become insolvent or lost value. He also warned that fraudsters continue to exploit the rising popularity of crypto assets to lure retail investors into scams. Gensler added that these investments continue to be replete with fraud, bogus coin offerings, Ponzi and pyramid schemes, and outright theft where a project promoter disappears with investors' money. Last, Coinbase wants to offer crypto-linked derivatives in the European Union. Coinbase told CNBC exclusively on Friday that the crypto exchange entered into an agreement to buy an unnamed holding company, which owns a license that would allow the crypto company to achieve its goal. That license refers to the EU's updated rules governing financial instruments, which includes fixed income and derivatives. The move is part of Coinbase's long-standing goal to serve professional and institutional customers, and if it completes the deal, it would mark the first launch of derivatives trading by the firm in the EU. Coinbase already offers spot trading of certain cryptocurrencies, but with a license, the platform would be able to start operating regulated derivatives like futures and options in the region. The deal is subject to regulatory approval, and Coinbase expects it will close later this year. All right, back to spot Bitcoin ETFs for our main story. I spoke with Ben McMillan, the founder and CIO of IDX Digital Assets, on what the impact of an approval of one of these proposals could mean for retail investors and institutions.
We are a few days or even a few hours away from a decision from the SEC on these potential spot Bitcoin ETFs. What's your expectations on whether the SEC will give the go-ahead for one of these spot ETFs? And also, what are your price expectations for Bitcoin in the aftermath of that decision either way?
Yeah, so I think at this point, we've seen the SEC has clearly been very deliberate with their approach to allowing spot Bitcoin ETFs, and as such, so have the issuers. And at this point, we've seen a lot of back and forth. The market expectation is that it's going to hit this Wednesday, the 10th. I think that's the likelihood. At this point, we have all the updated S1s. For any offering that comes to market, of any type of kind of 40 Act fund, ETF in particular, there's a lot of back and forth with the SEC. So this isn't just these issuers, putting something out there and hoping it hits. They have good visibility and a high likelihood that this gets allowed. So I think at this point it'd be very surprising if that were not the case, and I think it is imminent. I think the market is right that it's likely going to be this week. So the next question is, what does that mean for price action? Longer term, this is very bullish, and I'll get into that. Although I would caution investors that we've started seeing some bullish price action in the last couple of weeks in anticipation of this event. So you do have to be a little bit worried about the buy the rumor, sell the news type of trade here. Now, do I think the bottom's going to fall out? No. But I don't think people should, necessarily rush into, Bitcoin expecting a huge bump day of. Although it is Bitcoin, anything can happen. I think what's more interesting, however, is, really what this portends for Bitcoin and specifically the mainstreaming of Bitcoin for the audience, a greater audience. The appeal of the spot Bitcoin ETFs wasn't so much, in my mind, wasn't so much necessarily the fact that it was spot, although that matters to a lot of people. It was who was behind it. The fact that you've got really big names, BlackRock, of course, and Fidelity being kind of the two poster children here, suggests that once these ETFs are allowed, they'll start to find their way into things like 401k type plans, retirement plans. All of a sudden, it's, the idea of Bitcoin in model portfolios is going to be a lot more normalized. And so I think longer term, longer term, this really opens up the audience of people that can invest in Bitcoin. And the last thing I'll say from kind of a market perspective, a structural perspective, is the fact that they're owning spot is, any dollars that come into these ETFs are going to have to buy spot directly. And so, a lot of people are excited about that fact, again, from a structural perspective, being a price catalyst for Bitcoin.
Yeah, let's talk about retail investors. A lot's been said about these ETFs and their benefits for Wall Street or for institutions. But in your view, what's the benefit for retail traders buying into these products versus just buying and holding Bitcoin directly? Is it the long-term, say, like 401k replacement, retirement interest there? Is it the stability? What's the benefit over just buying the asset itself?
I think the big one is just the kind of the standard benefits of an ETF wrapper. It's easy. It can custody anywhere. It's for a lot of folks, despite the fact that it's relatively simple to set up a Coinbase account, it's another account. It's a leap that a lot of people just aren't going to take, and so we saw with early enthusiasts in Bitcoins, everybody was happy trading in, trading spot with, the likes of Coinbase, et cetera, even some, financial advisors and institutions, but you have to, still custody it yourself. The fact that this can, settle in any account, it's an ETF. There's a huge layer of trust there. And we saw this, with Bitcoin futures, people liked that the CME was now a counterparty, and they didn't have to necessarily deal with custody issues themselves. I think this is just one more huge step in that direction in terms of making it very easy for people to just buy it like they would any other stock in any kind of stock account. So I think we will see retail money flow into this. And I like I said, I think this is the last really big step in kind of the mainstreaming of Bitcoin, for a huge, much bigger audience of investors.
I also want to talk about something that you mentioned earlier. We got some new filings today. We learned more about the fee structure for these spot ETFs. It's somewhere around 0.3% for them on average. Grayscale is a bit higher at more than 1%. Those are higher than, say, the SPY ETF that tracks the S&P 500. That fee is around 0.1%. Do you think those higher fees are justified given the custody process and so forth? Are they at all a deterrent?
No, I don't think so. For the exact reason you mentioned, there is a cost of custody here. It's non-trivial. Anyone who's tried to do this themselves knows that. And also, when you look at it in the context of kind of smart beta or alternative asset class ETFs, they're very much in line. Frankly, even a little bit cheaper than what you might see in some of the more sophisticated factor-based stuff. So I don't think the fees are going to be a deterrent at all. In fact, if anything, I think we see some of the filings have shown that people are going to, some of the issues are going to rebate fees for a certain period of time or up to a certain amount. So I think that's signaling that they're aggressively trying to attract, flows, specifically retail flows, into their ETFs. But yeah, that aside, I don't see the fees being a big stumbling block for retail or institutional in these.
All right, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.